Hey guys, you want to learn how to day trade? Well, don't make these 7 mistakes. I've made every one of them, and I don't want you to run in the potholes like I did. And if you'll allow me, I'm going to go through all 7 right now. 7 mistakes every new trader makes. Number one, trading without a plan. You have to have a plan. Number two, risking too much on one trade. You do that, it's going to blow up your account. Number three, revenge trading. You're mad, you lost money, you're going to get it back. No, you're going to lose again. Number four, over trading. You're trading too much. You're in and out. It's like pulling the one armed bandit. Don't do that. Number five, buying because of social media hype. You see something on Facebook, Twitter, or X, TikTok, whatever, some hot stock, you jump in it. Number six, ignoring stop losses. Number seven, thinking day trading is just a way to get rich very quick. It's not. Okay. So I want to go through each one of those 1 through 7. So, number one, plan. Got to have a plan. Okay. When it comes to plan, I want you to think about I've got stock on here. What stock am I going to buy? Have a plan. I'm going to kind of lean toward an index, the SPY, the SPY, instead of like a Tesla. Okay. And we're talking about day trading. Okay. So, stock, a setup, and an entry. What's your setup? When are you going to enter? You got to have a stop loss. And then certainly after you get in the trade, you got to exit the trade. If you don't get stopped out, you got to know when to exit or how to exit to capture that profit. I'm going to go through each one of these. I'm going to slow down a little bit. I'll have to stop sharing this screen and share my trading platform so that you can understand it a little bit better. But I will try to slow down and try to go through everything that I can. Excuse me. Okay, so trade the SPY on the stock. I would encourage you just to trade the SPY. It's the S&P 500 index. I would encourage you to do like next day expiration. You can trade the SPY today, today's expiration, next day, 2 days out, 3 days, etc. I would do the next day. Okay, so whatever day you're on your phone or at the screen, you want to do next day. In the money, ITM, out of the money, OTM, at the money, ATM. It would be cool if you could buy your strike that's in the money, and I'll show that to you. And do it with a market order. What's a market order? It gets filled just like this. No limit orders when you're buying. That's the way I do it. Okay, you want to get in it quick. If it hits your setup is there. The ball's right down the middle. We're going to hit it. Okay. Now, when you sell it, you can do a limit order, but a market order for me gets me in the trade very quickly. Okay. So let me stop sharing this screen and let's look at the SPY next day expiration and some things like that. Okay. So you have a 5-minute chart in front of you. Now, let me stop just for a second and explain this. You're going to have to get acclimated to your trading platform. I have TOS Thinkorswim, which is through Schwab. I've been doing business with them since 1996. And you may be on Robinhood, Webull, etc., E-Trade, whatever. You have to get familiar with your trading platform. You got to know how to buy and sell. If you don't know how to do that, all you got to do is watch a video with your trading platform and it will show you. Okay. But you have to be familiar with that. But on this platform at the very top, you can see right here, it's a 5-minute chart. Okay. And that's where we're going to focus on our setups in a second. But right now we're talking about SPY. Here's SPY, and this is live. Okay, so SPY closed today at 739.09. That's $739.09 is where it closed. And right now it's trading live at 738. It just clicked 12. So we're talking about next day expiration in the money market order. So we would go to the trade tab up here if we wanted to purchase it. And let's say we would look at July the 29th. Let's say that's next day. And if it's at 739 in the money, you would go to the 739 strike over here. Why? Because it's in the money. Anything under 739 or under 740 is in the money, basically. Out of the money is going to be 740. It's not at 740. That's out of the money, and it can be at the money too. But what I want to do for an example is try to find a strike, okay, that's around $300, because that's what I wanted to focus on, is a $300 range. So on SPY, we're looking at, over here is your bid and ask. So if I wanted to get something around $300, I would have to go to the 741 strike, okay? So what does that mean? I want that SPY to go to 741 and over so that I can make money on it. Now, if I want to buy that, I'm going to go to the ask, and it says, if you can see the little buy signal here, I'm going to click it, okay? And mine defaults to 10 contracts. You could bring that down to one contract, and you got to know that $2.92 equates to $292. So we're just going to say that's $300. And you can see over here on the green line, it's a call. I want it to go up. Okay, I'm long. It's not a put. The price is $292. And under order, you can click there and go up, and you could actually click market right here. We're not going to do that. And then you could come over here and click confirm. Okay, and delete real quick. Okay, so I'm not going to buy it because it's 24 hours. It's trading right now. Okay, so we've got a 740 strike, which is a little bit out of the money. I'd rather you be right at the money. It's a little easier to make money if you can buy a strike close to where it's trading at. Okay, at the money, in the money. But if you have to go outside of the money a little bit to capture the amount that you're looking at, if you say to yourself, I'm not going to spend more than $300 on a trade. That's what I'm going to pay for it. I'm not going to lose that. That's what I'm going to buy, $300. Well, that's what you'd have to do, is go to the 741. Okay. So I've talked to you about the SPY, next day expiration, in the money, strike with a market order. Okay. So I'm going to stop sharing, and we're going to go back to our document. And for reiteration, we've got number one, trading without a plan. Number two, risking too much on one trade. Revenge trading, over trading, buying because of social media, ignoring stop losses, thinking day trading is a way to get rich quick. So we're talking about the plan. I talked to you about the stock. Let's talk about the setup and the entry. Okay. So the setup and the entry, we're going to use a 5-minute chart that you just saw. And there's 3 setups that I use, and you can use, there's millions of them. And let me say this in parentheses. This is for entertainment purposes only. This is your prerogative. You do whatever you want to do. And another thing, there's no holy grail. No setup works every time. Even if you swing at a strike and you make good contact, oftentimes 7 out of 10, most of the time, you're going to get out. Okay. So nothing is for sure. That's the reason you use a stop. But we're going to be using the RSI less than 30, the 821 moving average cross, and then we're going to have levels. So what I'm going to do is get off of this, and then I'm going to go back to that trading platform, and we'll go through those. So the RSI less than 30, let's stop sharing here and go back here. May take me just a second, and we'll go back to the window, and we'll share and go to our chart. Okay, so we're at a 5-minute chart, And down at the bottom, we have RSI, which stands for Relative Strength Index. We know that the Relative Strength Index is going to have two big, bold lines. One at the top is 70, one at the bottom is 30. If a stock or an index or anything goes below 30, it's oversold. Over 70, it's overbought. And what tends to happen when it gets overbought, it tends to go down. When it gets oversold, it tends to go up over time. Okay? All right. So we're focusing on the 5-minute chart on the S&P 500, SPY, and this setup we're looking at is when the stock goes below 30 RSI, boom, we enter. Like right here, the stock goes below 30, you can enter. But as you can see, you enter right here. Let me put a arrow on it. You enter right here just as soon as it does. And then what happens? It goes up a little bit, excuse me, and then it fades, it pukes, it rolls over, and look how far down it goes. I mean, for the next, really nearly for the next hour, okay, it goes all the way down here. And we get all the way down to about a 10 and a half RSI. And we purchased it, let's say we purchased it at a 26. So when it goes under there, that doesn't mean it can't keep going. Nobody knows. Okay, you're playing this game live. You're not in the stands, you're at the plate. Okay? And so what that basically means is you're buying about right here, if you saw that arrow, and then you're buying about right in here. But look at this. This is definitely the floor. I mean, this obviously is a perfect buy. And what most people would do is buy it here and then buy it here again. Okay, knowing that it's not going to stay under this 30 the whole trading day. And did it? No, it didn't. Okay, it came completely out of that in a matter of 20 minutes, and it clipped a high nearly of the immediate hour, and then it went back down, okay, and dipped back down below 30 for just a little bit, and then it went back up again, and then it came back down and created a low of the day of 735.87, but that low never did get under 30 RSI. And then look what happened. Boom. Yeah, I mean, you got a good move right here from 735, $3 to 730, nearly 4, 739. That is 4, 739. So you got a $4 move the last hour and a half of the trading day. So the setup, the entry is going to be when the stock or the index trades below RSI 30. Okay. Now, the next setup is going to be an 821 cross. You need to probably, or maybe I need to do a video on moving averages. You can set all of these lines up on TOS. You can let me get this arrow off here. On TOS, you can click this right here, this little hourglass, so you can see there's all kind. Right here, I've got the 21 exponential moving average. I've got the 8 and the 200. Okay. Now the green is the 200. The fluorescent is going to be the 21, and the white's going to be the 8. So when I say it crosses, I want the let me get this bigger. I want this 8 line right here to cross above the 21. And obviously you would want it to stay just like this. Look what happens here. The 8 crossed the 21, and what happened to the price? It created basically a high, nearly high of the day. Okay. Now let's back up, and you can see before the stock market ever opened today that the 8 EMA crossed negative below the 21. It looks like about 6 a.m. Central Time. It crossed below that, which you could go short. It never crossed back above it to go long on the 821 setup. Now that's what we're focused on. Don't think about the RSI 30. This is another setup. This is another pitch. Okay. New pitcher, new pitch. So if you're going to play the 821 crossover and you want to wait to buy calls, well, you just want to wait on it. Just wait. You're not trading. You're just sitting here. You're sitting on your hands. And then, yeah, you probably would, the first entry would be right in here. Okay. That would have been about 115. And if you set your stop right, you wouldn't have gotten stopped out. Okay. And then you would have held on there for about 30 minutes. Then boom, you could have made some good money on the 821 cross. So when the 8 exponential moving average crosses above the 21 exponential moving average, that is a bullish sign that the price is going to go up. Does it go up every time? Well, it didn't go up much right here. Then the price came back down, and look at the 8. The 8 actually crossed above a little bit, and then it went all the way back down, crossed negative, and then it crossed right back up. Okay. That's the reason you want to set your stop loss far enough away that you don't get stopped out too quick, and you can let that price run, let it breathe a little bit. Okay. That's the reason you don't have tight stops. If you have your stop loss too close to your entry, all you're going to do is just get stopped out every time. It's not going to work. Okay. So that's the 821 entry. We've talked about the RSI, relative strength index entry, on the 5-minute chart when it goes below 30. We've talked about the 821 cross when the 8 line crosses above the 21. And hey, you can do all kinds of studies. You can do a 913. You can do a 921. You can come up with all kinds of stuff. You can go to AI and plug in what is the best moving average cross in the last 2 years on the S&P 500. It may tell you the 520. I've been using the 821 for a long, long time, and I like that. Okay. One shoe does not fit everybody. Okay. I got to have something to drink. Okay. Here we go. What's next? Levels. So I've got marked on the document, and I'm not going to go back to the document right now, but I have marked on the document, mark the previous day high, the previous day low, the pre-market high, and the pre-market low. So your third entry would be levels. So what does levels mean? Levels means high of the day, low of the day, kind of like a floor and a ceiling. Excuse me. Stock comes down to the floor. A lot of times it bounces up, goes up. Stock goes up to the ceiling. A lot of times it moves down. That's resistance. Okay, so what do? Well, if you're going to play levels, most of the time you're going to go long when it breaks through the ceiling. So you got to know where the ceiling is. Well, I'm fixing to show you exactly where the ceiling is. So on the SPY, I'm going to click this. Excuse me. Click a drawing here. So this morning, the pre-market high was right here, 746.53. You mark a line. We'll say the pre-market low is right here, 744.05. We'll say the previous day high was, I can't remember. I'd have to go look, or I have to move this chart right here. But let's just say the previous day low was here. And let's say the previous day high was here. Okay, so you've got 4 lines. And what you want to do is you want to wait for that stock to break those lines up if you're going to be long. Now, if you're going to be short, what you would do to go short is you would wait till it breaks the previous day low. You would really watch it when it broke below the pre-market low. This is your pre-market low before the market opens right here. Okay. It breaks below that, you're like, we may be in for a down day today. And we were. But you would wait. You would wait till it broke that previous day low if it is below the pre-market low, okay? And you would go short. But to go long, you would be right the opposite. Right here's your ceiling, and here's your next ceiling. Okay, so you could go long when it breaks the pre-market high. If it had ever traded over 746.53, you go long right in here. Okay, and then you would maybe buy one contract here and wait, and then if it got above the previous day high, you buy another contract. You don't have to buy everything at once. Okay, if you have enough money in your account, you can buy one contract or one share, and then you buy another share. Okay, you buy in increments when you enter. That way, you dip your toe. You just don't dive in the water. Dip your toe. If you're not right, you get stopped out on one contract or one share. Okay, if you are right and your decision was pretty good, well, then you buy another one if it breaks a level. Okay, you don't buy 3 shares right off the bat. And you don't buy 3 contracts. If you're wrong, that stop loss is going to hurt you a little more. So you're patient, you listen, you keep your nerves calm, and you learn from people that have made many, many mistakes, like these 7 mistakes that I'm talking about. And you're looking at a guy that has made many, many mistakes trading and investing. And that's what I want to do, is I want to help you to avoid the mistakes that I've made. So if you'll listen to me, I can help you. I promise you. Okay. But it's your prerogative. You can do what you want to do. So we're talking about levels. We've talked about the RSI less than 30 down here. Okay. We're going to enter on the RSI when it breaks below 30. Now, remember, you have to set this stuff up on your chart or on your phone, and you got to figure that out. Okay. The only way I could help anybody if they had TOS, Think or Swim, and I could walk you through it, but there's no sense in me trying to do that, because most people's got Robinhood and all this other stuff, and most people, especially young people, are buying and selling on their phone. Okay, but you can figure that out. You can learn that. You don't have to go with 3 entries. You can go with 1. I'm just introducing you to 3. So we've got the RSI, we've got the 821 cross right here, and then we've got levels. Now, I know what some of you are thinking. Which one is the best? All of them. Okay. Nothing is going to work every time. What I focus on for me most of the time is the RSI. I've had more success trading the RSI on day trades with SPY or the IWM or QQQ. I've had a lot more success with the RSI than I have anything else. Right here's the IWM. That's the Russell 2000. Look at it today. Okay, you sit here and you can sit on your hands, and you can say, okay, I'm going to do the RSI 30 right here at 9:30. Okay, this is a perfect setup. Perfect, nearly perfect. But at about 9:30, the RSI is right here, 9:35. You enter right here, and your share price would be $291.48. You buy here, and the stock basically never came back down, or the index, to where you would have bought it right in here. Okay, you could have captured every bit of this. Buy it here, sell it here. You could have sold it nearly at the RSI of 66 if you wanted to, or you could have sold it right here. And the IWM, by the way, is a little cheaper than the SPY. And you can see right here, it's 292.91. So if I wanted to go in the money too, look at that. In the money would be 266, which is $266. So if you wanted to go small cap, and it's a little harder to trade the IWM than it is SPY, but the IWM is small cap. It is cheaper, okay, to do that. Just an idea, but I trade the IWM, SPY, and QQQ. So the SPY is the main one. Another drink. Okay, let's stop sharing. Let's go back to our document, and we can do a little bit of reiteration. The setup and entry, I've got 5-minute RSI, 5-minute chart RSI, and 821 moving average. And when the 821 MA crosses above the 21, buy calls. Levels, we're not dealing with puts. We're just going to try to be long. Levels, mark the PDH. Remember, previous day high, PDL, previous day low, PMH, pre-market high, and pre-market low. These levels are support and resistance. When the SPY breaks or goes over that resistance, you buy calls, okay? And then we segue to stop loss. I can go ahead and tell you right now, most people don't use a stop. And that's the reason 90% of beginners lose money, and about 97% of the people that trade, okay, are going to blow up their account over a long period of time is because of stop losses. So what is a stop? You buy a stock at $1 and you're like, you know what? I'm not going to lose but 10%. You put your stop at 90 cents. If the stock goes down to 90 cents, you're out. It's okay. You got to learn to take losses, small losses, if you're going to be a successful trader. You have to learn that. And most people have a problem with admitting that they're wrong. The market does not care anything about us. Okay. It's the market. We need to protect ourselves. So what we do is we put stops in on everything that we do. And if we're wrong, it doesn't work out. Hey, move on and let's do something else. Okay. So stop loss. And I've got in here 25% of the total price of the option. We're talking options here. So you've got a $300 option or a $3 call. You've got to put in your stop $225. You got to do the math. Okay. 25% of 300 is 75. Excuse me. So yeah, you're going to lose $75 on that trade if it does not work. And you're like, well, I don't want to lose $75. I want to lose $10. Well, if you do that, you're going to be in SPY for 10 seconds because this is what happens. It fluctuates. Okay. And it fluctuates very, very quickly. And when it's fluctuating, it's going to fluctuate you out of your money. Okay. So therefore, if you put a 5%, a 3% on an index like SPY and you're trying to day trade, it's just going to stop you out. You're just going to lose money. You'll lose money nearly every time. Okay. Because your stop is too tight. You've got to open it up. You got to give it some room to breathe. And sometimes if the market's volatile, 25%, it can move 25% in a minute. Okay. So usually though, 25% is a pretty good buffer. Got it? 25% stop loss on your calls or your puts on your options. Okay. For a day trade. So I hope you get that. And then we have an exit. Okay. So we have to learn that when we buy our option at $3 and the option goes down to say, let's just pretend that we're in this option right here. We bought it at $3. We put our stop at $225 and we're watching it. We're nervous. And it goes from $3 down to $275, down to $260. And we're like, oh no, man. It's going to get down to $225 and stop me out. And then all of a sudden, it just catapults up. Okay. And that $3 goes to $360. What are you going to do? You're going to sell? You could and make $60, but you shouldn't. Okay. What you should do is move your stop, go in and move your stop from $225 to break even. What did you pay for it? You paid $3 for it. Move that stop up to $3. Now you're sitting here and like, okay, all right, I'm in the trade. I have bought it, and my stop is at my cost. I'm not going to lose any money. You could put like 305 on it, okay? 301, whatever. If it comes down to that, I'm not going to lose any money. And you're sitting there, and it does the same thing. It's 360 that comes down to 340, and it jumps up to 380, 390. What do? Well, you go in and move your stop up. Can you get this? You can move your stop up, okay, little by little, and a lot of traders moves it up about every 25%. It goes up 25%, they move it up. Okay, and here's another thing. If you have enough money in your account, you can buy 3 options or 2 options. The option goes up 25%, you sell one. Okay. You bring the other one up to where you sold that one or a little bit under it, and you ride it, and then you do the same thing. You sell it if it goes up 50%, or you move up your stop. In other words, you're going to trail that stop. You're going to trail that stock or that option if it keeps going up. And that happens sometimes. And it's a wonderful thing when it happens. It's really fun. Okay. But it doesn't happen every day. Okay. More than likely, when you put an order in, a lot of times you're going to get stopped out. You just have to wait for the fat pitch. You got to wait for the right setup, and you have to be patient. You can't just open this thing up and say, I'm going to make money. It don't work like that. Okay. You got to get in the plate, be ready, and you got to keep your eye on the ball, and you got to wait for the ball to come down the middle to give yourself a greater chance of success. Okay. So we're talking about stop losses. We're talking about exiting. Let's scroll down. Okay. So we've basically scroll back up. We've basically covered number 1. I don't know how long I've been talking to you, but we've covered number 1, the stock or SPY, the setup and the entry, the stop loss, and the exit. Okay. Number 2 is risking too much on one trade. A lot of people don't know how much money to put on a trade. Well, I'm here to tell you, don't lose more than 2% on any one trade. You've got to do the math. If you have $5,000 in your account, 5,000 times 2% is how much money? It's $100. That means the maximum amount you can lose on a trade is what? $100. That's the only way that you can become a successful trader or an investor. You have to mitigate your risk. And that's where the 2% comes in. You go back to that $300 call. How much is 100? That would be 3 minus 100. Your stop would be at $2. Okay. It wouldn't be at 225. You'd be working with about a 30% or 33% stop loss on that. But you cannot afford to lose more than 2% on one trade. If you do, you're going to blow up your account over a period of time. I promise you that. Most people put $500,000 into their account. What are they going to do? They're going to put, they got $1,000 in there. They're going to put $950 on one company. And you're going to see them on YouTube. You're going to see them on TikTok where they made 4,000% and they made millions of dollars and all this kind of stuff. Better be careful. You better listen to this old man. Okay. It's not going to work. I promise you. Your day trading is a game of base hits, not a game of home runs. You've got to learn to hit base hits. Okay. Not home runs. All right. So, number 3, revenge trading. You lose money. It upsets you. You're emotional. You're going to try to jump right back in and make that money up. Okay. You bought it for $3. You put your stop in at $2.25. Everything looked good. And oh my goodness, President Trump has bombed somebody else and the market tanks. You get stopped out and you're like, oh crap, it's going to come back. And you jump in there and do something else. You're trying to make that money. That revenge trading will blow up your account. Over trading. You really don't need to trade more than 3 trades a day. And to be quite honest with you, 3 trades a day is a lot. Okay. most of the time, I'm a teacher by trade and have been for the last 12 years, basically. But when I'm out for the summer, out for the holidays, things of that nature, and I'm trading, and even when I wasn't teaching and I was between a business or a job or whatever, I might make 6, 7 trades in a day. But most of the time, I would not make more than 2 or 3 trades. It's just a lot of it is how many strikes you get. You have no idea. Okay. But I really think for a beginner, 3 trades maximum for the first month so you can get totally acclimated. Number 5, stay away from this social media hype. You've got to get your eyes off the television screen and quit looking for somebody to tell you how to do something on the television. They have an ulterior motive. I don't have an ulterior motive. I'm not selling you anything. All I'm trying to do is help you. I just want young people. I'm 61 years old. Okay. I'm not selling a subscription. I'm not trying to do anything but help. I don't want young people to make the mistakes that I made. That's the reason I'm doing this. I'm going to go from the classroom to the computer teaching. Okay. And I'm going to retire in about May and going to be certainly doing this full time for sure. But anyway, stay away from social media influence when it comes to your stock trading, as far as buy this stock, sell this stock, and all that kind of stuff, unless you really know the person and you're like, I trust that person. But even at then, do your due diligence. Okay. I hope you do. All right. So number 6, ignore stop losses. Most people ignore stop losses. I've talked to you about that. And 25% should be your stop on options. If you're like, I don't want options, I'm just going to buy stock. It's a lot easier for me to buy 1 share, 2 shares. I don't want nothing to do with options. I don't understand it. I don't like it. I don't care for it. That's fine. Make sure your stop on stocks is 7%. Okay. So you buy $100 stock, you got a $7 stop. You need to have it at $93 on your stop. It gets under 93, you got to be out of it. Okay. Now that's what the smart people have said about stock stops over the last 30, 40 years. 7% is a good percentage for the stop when it comes to stocks. And the last one, this seven mistakes that most traders, especially new traders, make, thinking that day trading is a way to get rich quickly. Listen, you want to get rich? Here it is. I got it for you. Live below your means over a long period of time. Take that discretionary income and invest it in American businesses through the stock market. And if you do that, you'll be financially independent, especially if you're 20 when you're 40 years old. I tell my students in economic class that all the time. You have something as a young person that I don't have, and it's a 4-letter word, and it's called TIME, time. And that compound interest will work for you. That's how you can get rich. Day trading, independent investing, you got to think about base hits, not home runs. You get up there and you swing for the fence, you're going to blow up your account. Okay? So remember, today is the first day of the rest of your life. And I hope you have a blessed day.